Hello everyone, Corey Mitchell from TradeThatSwing.com, and we're going to quickly look at the stock market, gold, and Bitcoin, how they're performing from a swing trading perspective. Each week I go through the same process. I update this article. If you're ever wondering where it is, you can go to TradeThatSwing.com, go to Stocks, Stock Market Analysis, and Trades, and you'll see the swing trading stock market outlook near the top of that page. So, heading into the week of December 2nd, stock market conditions are good. We'll get to Bitcoin. It's in good shape, but I am out because it's near my target, and I am still not interested in gold here, and we'll look at why. If you're looking for some trade ideas, you can check out the best swing trading stocks list for November. It's two lists, basically very strong stocks and very weak stocks. These other ones as well you can check out for some ideas or to find patterns you might trade in things that are strong. Let's look at the chart. So I look at a few different indices. We have the NASDAQ 100, S&P 500, the NYSE Composite, and the Russell 2000, each looking at a little bit different segment of the market. This S&P Composite Index, TSX, is the Canadian index, all exhibiting uptrending behaviors. We have higher swing highs, higher swing lows, higher swing lows, higher swing highs, higher swing highs, higher swing lows, higher swing highs, higher swing lows. So nothing to, really cause for concern here. We will get a pullback eventually, and as long as we keep making higher swing highs, higher swing lows, all is good. Very strong in all of these. December does tend to be a good month for the stock market. So far, that is playing out. Bitcoin, this is hanging out just below the $100,000 mark. Got very close last week or the week before, and that got me out because my target was 100,000, and it got very close. I'd been in it for quite a while, and basically I'm just waiting for the reset. I had a roadmap sort of laid out for myself, my trade plan up to 100,000, and that was achieved. And now it's a wait and see on how the price reacts around this level, and that'll determine whether I get back in or stay out for now. Gold, still ugly, lower swing lows, downtrending type behavior, opposite of what we're seeing in the stock market. You can see in the stock market we're getting these higher swing highs, higher swing lows, and right now we had a big lower swing low. So a pretty rhythmic uptrend in the minors here, and dropped considerably below that last swing low. So a change of dynamic. Whenever there's a big change in dynamic like that, I am going to stay out. So I don't need to necessarily wait till we make new highs, but I do need to wait till we start making higher swing highs, higher swing lows. I want to see an uptrend start to develop, and right now this is just of no interest to me. It doesn't fit any patterns I trade, so I will stay out for now. Let's look under the hood. This is the market health indicator. So this is a chart of the S&P 500, and these health indicators tell us what's kind of going on underneath the surface of those. So volume, not really important to me at the moment. Rate of change is this first blue one, and it just gives us the daily percentage movement of the S&P 500. What I'm looking for here are big drops indicate big selling, and uptrending behavior is more classified by this lower type movement, less volatility. It's prices are moving up, no one's really panicking, but when you get these times of panic where you get 2% sell-offs or bigger in the S&P 500, that is usually a time to be quite cautious. Volatility is increasing, and it's usually followed by more downside, or if it isn't, usually at least stepping aside for a couple days, you don't miss out on anything. So we had the last drop here on October 31st, and you can see we had the big drop. Wouldn't have missed out on anything by just taking a couple days off, seeing what happens. We start to stabilize above the prior swing low, and we start to pop. So you can say, hey, you know what? I feel okay getting back in, but at least take that bit of time when you get these big 2% drops. Right now, none of that happening. Market seems happy, low volatility, no big downside sell-offs, so that's what we want to see. That's exhibiting uptrending behavior. Advanced decline line is advancing stocks minus declining stocks is a cumulative number, and it is basically moving up with the S&P 500. We can see it's right near highs, as is the S&P 500. Upside volume versus total volume, it's a neutral face because it's not giving us anything right now. You can see the ratio is kind of in the middle here. We're looking for extreme values up here indicating lots of buying interest, or down here indicating lots of selling interest, and we're just in neutral territory. So not giving us any info there. This is percentage of stocks above their 50-day moving average. 50-day moving average, just a very crude measure of stocks in uptrends. Generally going to be much easier to make money on the long side when most stocks are above their 50-day moving average, or put it a different way, when most stocks are in uptrends, which makes sense. You could, not that I recommend picking random stocks, but if most stocks are in uptrends and you got somewhat decent entry point, it's going to be easier to make money because most stocks are just moving up. So I like to trade when the wind's at my back, and right now we have 69% of S&P 500 stocks are above their 50-day moving average or in short-term uptrends, crudely measured by a moving average, and 66% of all US stocks above their 50-day moving average. So pretty good market conditions right now. Sectors on the move haven't changed since last week. Consumer cyclicals, financials, industrials, seemingly doing the best. If you look at consumer cyclicals near the top on all three time frames, so that's definitely our strongest sector. Financials and industrials were kind of in the middle of the pack last week, but not too far behind the leaders. And they're the next best performers on the 1 month, and they're up near the top here on the 3-month performance. But definitely consumer cyclicals is the main one. So what am I doing this week? Well, I'm still taking long stock positions, nothing in gold and nothing in Bitcoin at this point. So just kind of waiting on those, but who cares, because there's lots of opportunity in the stock market. Also day trading lots, if you've seen some of my recent videos on day trades, and yeah, always that option as well. Swing trading's really good right now. Stock market's good, but swing trading is definitely more of a hot pockets of activity where it's lots of action followed by, you could have a month, 2 months, 3 months, 4 months where there's very little action, especially if you don't short. A lot of swing traders are long only, you're going to have more activity if you're willing to go short, because during those bad times in the market you can short. But even then, there's periods where it's kind of in the middle and we step back. Whereas when we're day trading, we'll find opportunities nearly every day. Like, it's pretty rare that we don't. And depending on how long you trade for, of course. But you're basically seeing a whole bunch of different market conditions within a single day. So we kind of go through these cycles, and you can find those opportunities in those pockets within the day when the movement is good. So just depends on what kind of trader you want to be. If you don't mind the pockets of activity, then swing trading is good. But if you wanted to add in a little bit more steady trading that you can do every day, then you can also check out the day trading as well. Last day for go to the trading courses, Black Friday until the end of November. So a little bit of time left to get 20% off on trading courses, whether you're interested in swing trading, Forex, stock, day trading, swing trading, stocks, and Forex. There's also an investing ebook and Forex introduction course there as well. So either way, have a great rest of the weekend.